Bill here with another edition of the Metals Minute. Today's Wednesday, November 3rd, 2021. Well, today is the big Fed FOMC meeting, Federal Open Market Committee meeting. And we've seen a pattern over the last few years when these meetings happen, especially when it's expected to be gold or silver positive. There's an incredible smashdown in the paper metal prices before the meeting. And we've seen that begun to happen in the last 24 hours. And so we have gold and silver both temporarily down. I believe they'll resume that march northward after the market digests what news the Fed begins to talk about. So keep an eye on that, but that's nothing new. Thankfully, they don't suppress the platinum and palladium in the same way that they do gold and silver. So in the numbers we see that platinum and palladium have held up and even climbed a little bit since last week. Gold and silver have been smacked down. And as we mentioned, we have mentioned since the last projection for 2021 back a year ago or so, we talked about platinum and that would have a good opportunity in relation to palladium. And you'll notice in the one-year numbers as of today, platinum is leading the way and palladium's down a little bit. Nothing that we didn't expect and that we didn't warn our readers and those of you that watch the broadcasts. We've talked about that many times since about a little over a year ago. So anyway, we're glad for the fact that they don't manipulate all the metals to the same degree at the same time. So it's good to be diversified. We just, I really believe it's a great opportunity every time they do this. Just purchase some more silver and platinum and it'll be on the way here shortly. And it's a great opportunity to continue to build your stack of metals. In this environment. We are heading into a stagflationary environment, it looks like. Have a link to an article about that. One of the things, the indicators that we talk about, and I'm going to show you a graph here. This has accurately predicted recessions since 1973. Every time the indicator has gotten up to the 8 level or higher, and incidentally, today it's at a record high level. It has never been higher since it was created in 1973. And what that means is on average it's within 18, 19 months, recession happens. Sometimes it was really quick. Sometimes it was a little bit delayed. But in every case, when the indicator gets to 8 or above, and right now it's way above, that has always prefaced a recession. And as we've talked about, a recession is part of the equation for stagflation. We need a slowing economy, which is what recession does, less growth, slow growth, negative growth, combined with higher prices or inflation. So when we have those two things together, that signals stagflation. And as we know, stagflation, gold and silver are some of the best performing assets in that environment. During stagflation and in the aftermath. So we have to be patient through these short-term dips and these short-term smashdowns. If you can, just use them as a buying opportunity.